Hello, this is Ken Simpson with the watch list presentation for the week of October 28, 2018. The following is for educational purposes only. Nothing in this presentation should be considered investment advice or a recommendation to buy or sell any security or to participate in any particular trading or investment strategy. Trading involves risk of substantial loss, and you assume all of that risk. This is not investment advice and may not be suitable for your situation. I am not an investment advisor. If you want someone to blame for your investment losses, hire an investment advisor. Okay, the charts you're going to see in this presentation were created using MarketSmith, which is a registered trademark of MarketSmith Inc. They've been enhanced with a custom Chrome browser extension that I wrote. Please don't ask for a copy of the extension without MarketSmith's permission. I won't distribute it, and they will not give permission. All right, so let's get started. So we'll start with the crystal bull indicators. See, the trading indicator is somewhat bullish actually, and the macro indicator is also bullish, and the trend indicator is currently bullish. Now this trend indicator and macro indicator will update at the end of the month, and I expect the trend indicator to turn into the red because we've just had a severe downtrend. Macro indicator may hold. There's still a few data points not in, but this may hold still in the green. The macro is not so awful right now. Okay, but anyway, let's look at the trading indicator, recent readings of the trading indicator. You can see that the trading indicator picked up this sell-off as bullish. It's figured this was oversold. All right, so this was not good. The trading indicator in recent readings was picking all these sell-offs as bullish, as oversold. Hopefully that means we're going higher, but this model went down with the market. Okay, that's the short-term indicator. Here is the trend indicator. Okay, you can see the trend is coming down, and this is probably going to turn into bullish territory here. All right, it went bullish or bearish. I mean, it went bearish here during this area, and it went bearish here, and of course it sat out a couple of these recessions. It went bearish in several of these places, but this might turn to a negative trend. All right, might be short-lived. These past ones were short-lived. We do have good, decent macro readings, so this may be short-lived, but this may very well, I expect this to turn into bearish territory until the end of the next month. Here is the put-call ratio. You can see this yellow, that's the put-call ratio. It's a bunch of noise, but we have built an indicator out of the crystal bull has built an indicator out of the put-call ratio. Look at where it crosses into the green. It's picking up these pullbacks. It picked up this one nicely. It picked up this one nicely. It picked up this bottom. It picked up this bottom. And it's right picking up this as a bottom. So the put-call ratio, which is currently 1.32, I believe. We'll zoom in here in a second. But this is picking up this as a bullish sign, buy signal for those who follow the put-call ratio. Okay, put-call ratio is currently 1.32. And anyway, the indicator is touching the green. Doesn't mean it can't go a little bit lower from here. It did be passed, but that is touching the put-call ratio as a bullish indicator right now. Okay, so hopefully we don't have too far down to go. And we'll just look at MACD. I don't really use this much, but the MACD a lot of people use. You're watching this histogram here, this gray bars, to go low and then cross over zero. And if we look at where we are right now, this is kind of a short-term indicator. It hasn't performed very well lately, but we're a long ways from crossing back over zero. So that can turn around quickly if we have a quick run-up in the market. That could turn around, and that will induce some of the people who follow the MACD indicator, and lots of traders do, and lots of trading houses do, to go back in. So that could be bullish. So let's get started here on MarketSmith. Okay, this has been ugly. Lost a lot of money here. A lot of traders lost big time money. A lot of people got wiped out in this. People with high margin and high, buying leverage ETFs and things, they got toasted in this pullback. IBD put the market in under pressure, uptrend still under pressure here, but then it put it in full correction, which it's been out of phase. This really is reminding me of this last correction where as soon as they announced correction, it went down one more day and then back up, and then it pulled back again. Same thing here. Many times they just pick the bottom with these correction calls, and it's exactly opposite of what they're trying to do. They're trying to get out of the market, and past few years that's been a good time to get in the market. So anyway, we are this if a person exited here, they probably were kicking themselves for a couple of days. They may have got back in. You know, this was almost a uptrend resumed here. You had 4 days into a rally anyway, but then it pulled back. So the people that got out are doing well, but this has been ugly. You know, this has given back most of the gains for the year, and been pretty awful. So you should be out of the market right now, looking for ways to get back in with this uptrend to come back. I don't think this thing's going to zero, but we're looking for things to buy, and we've got a couple things just to look at. Health equity. Okay, so what we notice on health equity is it had a beautiful run up and is basing. Not really a good double bottom, it's just basically a base. The RS line has been holding up okay, which is why we're looking at this thing. Earnings are decent, are good, great, and sales are decent, 25% sales growth. They have no 2 stock checkup flaws and no debt, 98 composite rating. Things are looking good on this one. This could be a wound spring. What I've pointed out here, I put in a sloping trend line on this. You'll look at the 21-day, this is the 10-day, the green, the 21-day exponential, and the 50-day. So these could, if this thing were to start heading north, these will converge. The green will come up a little faster than the magenta, which will, the 50-day won't move much at all. So these will converge into a power of 3 moving average convergence. And you hopefully would see the institutions come in and defend that. So we want to get it above, we want to have a power of 3 and then get above. So I've just got this sloping trend line to alert me so I can pay attention to it. That doesn't mean if it goes above this, I'm going to go out and buy this. But I'm going to watch for this to get above the 3 moving averages, which could happen with an uptrend here. Then we'll have formed a proper base. Hopefully you see a pocket pivot and a launch here. Okay, we're not running out and buying any of these. Another thing to look at is earnings, which are, we're in earnings season. This one it doesn't have earnings due for 5 weeks or so. Burlington, now many of the retailers have done okay in here, which you'll see in the RS line. This is sort of a flight to safety with this market crash. You know, they only have 10% sales growth, really not a typical Can Slim number for this, but it's okay in retail. Well, look what's happened. People, this is forming a base, and blue dot on the RS line. RS line's coming up nicely. So money has come into this. Okay, you've had a couple of pocket pivots here. So this thing could be viable for somebody that wants to be in the market and wants to be in something safe. If this turns into some kind of a market correction, crash, recession, consumers will be going more to the discount stores. Okay, that's OLLI, that's Five Below, that's Burlington, and, you know, the Dollar General, all those stores. Okay, this has 1,300% debt to equity ratio. That needs to be investigated. MLNX. Okay, been long downtrend base, but this has to get our attention. Okay, they've announced earnings and this thing shot up on huge volume. Nice earnings and sales growth. Not very much debt, 6.5 stock checkup flaws. So a possible entry here would be anywhere in here. The reason why this is here is because we have a early exit here, 8102. I'm just going to go ahead and set an alert there. Okay, so if a person bought this, you would have to exit if it started to fill this gap. All right. Okay, that's got decent numbers. It's already announced and has performed well. Look at the RS line. Popped right up out of here. Early exit. Don't ride this thing all the way down. ULTA, basing, RS line. Look at this, another retailer. People have been coming into retail. They're afraid of Silicon Valley right now. Okay, sales, 15%, not great. 33% earnings growth. 4 stock checkup flaws, no debt. ULTA, look at their earnings are expected to just continue to go as they open new stores and so forth. But it is still basing. The RS line's coming up. Not really an early entry on this. You could put in a sloping trend line on that, perhaps. Matter of fact, I'll do that just like I like to have the alarms go off so I can pay attention. Okay, tabula rasa. Okay, this is more of a double bottom, but it's a little irregular here. Big shakeout. Nice earnings and sales growth. Earnings are due in a week or so. 6 stock checkup flaws, no debt. Anyway, I put a sloping trend line here to pay attention if this thing were to start going higher. Anyway, the RS line's been okay. It hasn't really crashed here, but got decent numbers and would like to see a breakout on that. Wild horse, resource development, another sloping trend line. Basing, still basing. You've got a 4-way convergence here, but this is well below. If this thing were to rise, the green and magenta lines would come up, so you wouldn't really have a power through. You'd have to get a really fast breakout here, but you've got terrific earnings and sales growth. 8 stock checkup flaws, 67% debt, that's a little bit high. Okay, but anyway, wild horse in the oil services, oil drilling. So we would want to see that to break out. Okay, it hasn't really done too badly here in this correction, but still. Axon, not a strong double bottom, although it is a double bottom. I'm not sure why Market Smith isn't picking that up. I'd like to see more of a shakeout here. 25% sales growth, that's okay. 100% earnings growth is great. And again, if this thing were to start coming up here to get to a double bottom buy point, these lines should converge. All right, that's what we're looking at. I've got an alarm set to go off here to start watching if they get to convergence. Convergence will be a little bit higher. I've also got a sloping trend line on that. 8 stock checkup flaws. Would like to see a nice pocket pivot launch from converged trend lines. MetaFast, okay, popped up, filled the gap almost, and it's still basing. Again, if this thing were to start to rise, I've got the alarm to go off, could get a convergence of the 3 trend lines. Nice earnings and sales growth. 6 stock checkup flaws, no debt. The RS rating is 99. The RS line's held up okay lately, and this market's been going south. MasterCard, 3 stock checkup flaws. Earnings in 2 days, again with the possible convergence of these trend lines coming up on decent earnings. Could have a launch here. If we have a decent day tomorrow, could move this up. Both these lines would move a little bit, and then a launch through a convergence there if earnings are good. Earnings and sales have been okay. Earnings of 51%, which is strong, and 20% sales is okay. Earnings are expected to continue higher. Okay, got the alarm set to go off that, looking for a convergence. ABMD, not so pretty. Okay, took our lumps on that one. For EPS in 4 days, again with the possible convergence. This can go either directions, but it's got decent sales and earnings growth, 4.5 stock checkup flaws, no debt, 99 composite rating, really ugly. Fall off on the RS line, but would want to see earnings before anything and see a launch through there, through the possible convergence. Okay, have to wait for earnings. Wellhead, Cactus Inc. Okay, this pulled back here, pulled back into the base. This breakout failed, but still pulled back into the base. And you've got great earnings and sales numbers. You've got earnings are imminent. Okay, so we want to see these are converged, but we're well below. But we want to see what happens on earnings here. Okay, they could use this previous breakout. You could put a sloping trend line across that. Anyway, you're going off this prior base. VICI. Okay, VICI had a cup with handle, broke out, put in another base, and it's just right at the buy point. Good earnings and sales growth from 4 million in sales to 221 million in sales. That's a acquisition kind of numbers. 100% debt ratio, and we're right at the buy point. Not really any kind of an early exit on this. You'd have to take your lumps if this thing failed. Okay, earnings are imminent. Have to wait for earnings. Planet Fitness broke out and failed, basing again. Earnings are due in a week. Decent earnings and sales growth. Again, if this thing were to start to rise, you get the convergence here of the trend lines. That's what we're looking for, and a launch, hopefully. Okay, probably have to wait for earnings. OLLI. Now this has low sales growth, but again, look at the RS line has come up in this downtrend. People are going into retail. It's something they understand, and it's something they know that if consumers get scared, they go to the discount stores. It's really not basing very much. You still got a ways to go. You've got a convergence here of all the three, and anyway, that's it's just if you want to be in the market, these are a little bit safer. These discount stores. All right, not much of a base there. Same for Five Below. If this thing were to start to come again with the convergence, I'm going to go ahead and send an alert there at 120. Just to be alerted if this starts to converge. It had a breakaway gap and failed. It filled the gap and is still going down. Had decent earnings and sales and another month for the next earnings report. RS line has held up okay during this pullback, just pretty much pulled back with the market. See a launch there in a discounter. 9. This has a $8 million daily liquidity, so we have to watch out for that. It's again in the oil services, but popped up, and then we have a cup with high handle. The handle doesn't show here in Marcus Smith because it's higher than the left side of the base, but it still is a cup with high handle. Sloping trend line to pay attention there. Earnings are imminent. Earnings and sales growth have been fine. 9 stock checkup flaws, mainly because it's coming out of its IPO, and some of these numbers are gray. Anyway, that's where we are. Just a few stocks to look at. If you want to get back to the market, remember nothing you heard was a recommendation to buy or sell anything. This was for educational purposes only and not a recommendation to buy or sell any security. And thanks for watching.